The Money Show. Personal finance.
Nearly 20 minutes past 7 o'clock. Let's get into our personal finance feature. Warren Ingram, of course, joining us as usual then. Why do we pay our financial advisors when the markets have been doing terrible? Growth has been awful. All we're doing is paying for fees, essentially, when seemingly our investments are going back. It's weird that you make note of this, and I'll make note of a friend of mine who actually literally just asked, folks, I want to change where my retirement annuity is held, for example, because it just seems like everything is going backwards. Since 2016, he says he hasn't been making any positive moves. It's
hectic, and I think I'm looking at my inbox and it's full of questions like this. So this is quite brave, for an advisor to walk in and step
and
into the lion's den.
Why you need
Why
me?
are you paying me? So I think a couple of things. One, just to understand, when do you get the value from your advisor? And you don't get value. I shouldn't upset all advisors in the industry. You don't get as much value from advisors in good times.
Yeah.
So when markets are rising, you can kind of throw a dartboard at the stock market or at the unit trust market, and pretty much everything's going to go up. And then everyone's advisor is fabulous because no one looks at the fees anymore. Everything's going up, and they're happy. But when times are tough, that's where you see the value of a good advisor, because what happens is you're going to sit in front of that advisor, you're going to be complaining about the portfolio's performance. And let's face it, I think it's close to 6 years now where the JSE hasn't even beaten inflation per year for 6 years. That's, the tide's gone out, and now we're going to see who's wearing their clothes. And what's interesting is not many people are wearing their swimming costumes.
Yeah, unfortunate, sure.
So I get it that people are angry, but at the same time, it's important to figure out, are you getting decent advice? Because a great advisor can't lift the markets. They'd love to,
of course not,
and they'd love to sell you that story. I can pick the one thing that's going to lift the markets. Just go in here and we'll be fine. But what a great advisor should be doing is telling you kind of tough news and a bit of tough love, possibly, and not necessarily just what you want to hear. And if you're in that position where your advisor's saying, listen, where you are right now is absolutely right for you, then maybe you should be paying that advisor, because maybe they're telling you the things you want to hear.
Yeah. But how do you keep selling the long-term story when it seems like the short-term gain is also just like bad anyway? Because you'll say to people, look over the horizon. If it's a retirement annuity, for example, you're telling people, don't worry, at the age of 65, it'll be worth 10 million.
Yeah. So, and it's amazing. I mean, I had a youngster today say exactly that. He said, if I look at my stuff, my RA is going absolutely nowhere. Why am I putting debit orders into this? The best performing thing I've got is a money market fund.
Exactly.
And what are you doing with my money? And that was a brilliant conversation, because I think the thing to understand about markets now is whatever's happened in the last 6 years, it's a real mistake to say it's going to repeat itself exactly in this pattern for the next 6 years. What could happen, what we know for a certainty, is it's going to be different. It could go down.
Yeah.
That's scary.
Okay. That's not helpful.
It's not going to help anyone's growth. Then I think all advisors will be shot by their clients.
Yeah.
But it could go down. We need to understand. We need to appreciate that is a reality. It could also move sideways in a different way. It could just drift up and down and kind of go nowhere slowly again. But it could also go up. And I think that's a mistake people are making now, is that they've taken the last 6 years and they said to themselves, you know what? I'm done with this investment thing.
Sure.
I'm out of here, because things never go up. So someone who's only started investing in the last 6 years, they must be looking at their advisors and saying, you guys have all sold me a lie. This stock market thing and growth, what are you talking about? Nothing. Properties tanked. The shares have tanked.
Yeah, everything just seems to have
the only thing I should do is buy gold and put my money in cash, right? That's the story. That's what people are seeing. And I think that the trick is this is exactly the time to be patient, because I think we're building. I believe, and I'm hoping that it's not because I'm smoking good stuff. I believe that markets do eventually reward patience, and that's the story we should be telling people. It's not about just chop and change for the bright shiny little thing that happens to be doing well right now, because that's probably the most dangerous kind of investment there is. The one that's doing well today. That's the one that's not going to do well tomorrow.
Yeah. How do we get in on the trough, though? And I only ask because some will say, look, it looks like it's getting worse. So I'm going to take out right now, and I'm only going to get back in when things are beginning to pick up again. And maybe at that point, my money will be worthwhile.
My money will be fine.
Yeah.
So that's I mean, it's a brilliant, and it's such an intuitive question. It's such I mean, if we sit back and we look at this and we try and be logical, intuitively, that's what people would say is, I'm just going to wait for things to get better.
Yeah.
The question is, how are they going to know when things are better? Who rings? Where's the bell? And who rings it?
You're going to go into the crystal ball. You're going to go to Sangoma. You're going to go, anywhere and everywhere you can.
Adabile will tell you on the 31st of the month. Which month and which year, we don't know, but so that's the issue is the good times are only obvious in hindsight. That's the problem is the markets actually recover really quickly from these kinds of events. And what happens in the early days is things start to get better, but now we're so used to pessimism that we say to ourselves, hang on. Let's just hang on. This is, it's good. It's definitely going to fall.
It's going to dip again.
Yeah. I've been caught by one of these before. Let's just stick it out and we'll stay in our cash and we'll watch this thing, unfold. What happens then is it does grow.
Yeah.
And often it almost doubles on itself quite quickly. And then investors will say, you know what? It's gone up far too quickly. Let's just hang on. I'm sure it'll pull back. It might not pull back all the way to where the lows were, but it'll pull back.
This is the Naspers story in my head. I looked at the stock at 900 Rand and I said,
come on, it's expensive.
Far too high.
Yeah.
That's crazy.
Yeah.
And now it's been able to split off and still be worth over 2,000 Rand.
And I think that's the thing that people are missing is that, they're looking at the economy of South Africa and they're saying to themselves, the economy is really in the doldrums and it's going to take a long time to turn. And I think that's probably an accurate assessment. What they're not doing though is they're not saying to themselves, hang on, the stock markets always run ahead of the economy.
Sure.
So there's two parts to our stock market. I mean, I think we've got kind of twin sisters in one in our stock market. We've got the overseas companies and we've got the local companies. Yeah. So what's going to happen is those overseas companies, let's start with them. They are going to shoot ahead the moment the trade war issues around with the US and China start to resolve themselves. I don't think Brexit's a big issue for investors, but it's one of those things that must be resolved.
Sure.
And the moment we see what's happening in China, their economy starting to kind of just normalize and stabilize again, the international part of our stock market will recover and it will go ahead. And then I think the local part of the stock market here is going to start shooting ahead once people start to see the very first green shoots of economic recovery. And those companies have been absolutely hammered over the last decade.
Thwarted,
and so I think that's a mistake to make is don't look at the economic situation and say that's what the stock market's going to do. The market runs months, if not years ahead of what's going on.
Yeah.
And so I think that's the danger that we face is if we're sitting on the sidelines waiting for things to get better, what's going to happen is they're going to have gotten better and probably fallen over again by the time people say, oh, hang on, let me get in.
Now.
It's starting to turn over. Now I'm going to get it. And that's classic human behavior.
Where do we find the value then? Let's just say you're starting out right now. Where do we then look to say, you know what? It isn't doing well right now, but the fundamentals are okay in this segment, and let's perhaps try here.
So to me, I think investments require two things of us. One is an element of bravery, not stupidity, but an element of bravery and a huge dose of patience. And I think right now, I wouldn't try to be too clever with my investments. I think if you're looking at the JSE as an example, just get a good spread. Don't be too specific. People are kind of now caught. The bright shiny thing at the moment is gold. And they're looking at gold and they're saying, wow, let's just pile into gold. I think that's a mistake. I think spread your investments across the entire JSE because we don't know which sectors are going to recover first.
Yeah.
And then do the same on the overseas side. Be careful there that you don't just put everything on the JSE or everything overseas. There's quite a lot of market commentators now that are just writing off South Africa, just saying, send all your money out of the country. South Africa is a basket case. I think that's a huge mistake. So I would say if you're young and you've got a debit order and you want to be building up your investment portfolio, you don't want to be sitting on the sidelines anymore, take half the money, put it in the JSE, but spread it, put half overseas and spread it again. Because I think that's the key for success here.
Sure. It's trying to find a needle in the haystack with regards to the investment, because then once something picks up, you just hope that you can then shift everything towards that one pile, hopefully at a later stage, because not everything is gonna rise, with equal ferocity, if you want to call it that.
Well, I think buy the haystack. Don't buy the needle. Avoid needles. They cause pricks. So they hurt. So for me, I think the point here is buy the whole haystack and just watch that it goes up, because I think that's the deal here. Don't be too specific.
Yeah. All right, Warren, thank you so much for the time. Appreciate it. Always great having you. I certainly learn a lot every time you're here as well. So always appreciated. Warren Ingram, personal financial advisor and executive director at Galileo Capital, investing in the market right now. Yes, difficult, growth terrible, but perhaps looking at the longer term is still the way to go.